borrowing against your policy does not grow the policy. Paying yourself back with interest does not grow the policy. It is the fact that you are creating a tailwind in your financial world. So yes, you have growth in the policy, but it's what you're doing with it that is also creating growth in your own financial world, because now those dollars are not going to a third-party bank. They're coming back to you.
Welcome to the Bankless by Design podcast, where we rethink money, ditch the system, and rediscover what it means to truly thrive well. I'm Tricia Miller, mom of 7, financial coach, and founder of ThriveWell. Around here, we believe wealth is more than numbers. It's about freedom, stewardship, and building a legacy that lasts. If you're ready to challenge the norm and take back control of your financial life, you're in the right place.
Hello, and welcome back to the Bankless by Design podcast. Today, we're continuing through our Becoming Your Own Banker series. And Jonathan, today we have reached the final section of what Nelson calls the human problems. And this one is called Use It or Lose It.
That sounds simple enough, but what are we in danger of losing here?
Well, that's where I initially got tripped up by that very thing for a long time. I really misunderstood what Nelson meant by use it or lose it. I wondered if it meant that something bad would happen to my policy. Like, would I actually lose my policy if I didn't take policy loans? Or I don't know. There was just a lot of confusion there. And I think part of that came from things I had heard on social media that made it sound as though borrowing from the policy was somehow helping it grow. And therefore, if I didn't, it wasn't going to grow. But come to find out, neither one of those things is true. What Nelson is really saying is that it's not enough to understand the banking process in theory. We actually have to use it. Otherwise, little by little, we can lose our understanding of it and maybe even our confidence in it. But first, Nelson starts this section once again with the Bible verse. So I'm going to read that real quick. It says, Mark 4:25, "For he that hath, to him shall be given, and he that hath not, from him shall be taken, even that which he has."
Yeah, I was actually going to lean on your Bible knowledge here, because when I first read this, I was like, wait, like, I think I really misunderstood it, because I was like, the rich get richer and the poor get poorer? Like, that's not what he's going at, is it?
No, but to really understand it, I'm always going to suggest that we look at the context of the verse. And as I've said before, I think Nelson always put these verses in this book as a bit of an invitation to study the scripture, to gain more understanding. I think in part because he really wanted us to understand the scriptures, because he loved the scriptures, but also to understand the infinite banking concept more. So let's dive in. The first thing to know about Mark chapter 4 is that Jesus is using parables to teach about the kingdom of God. And there are 2 parables that lead up to this passage, including the parable of the sower and the lamp that's not meant to be hidden. And then there is another verse right before this particular verse that Nelson quotes, and Jesus says, pay attention to what you hear. And I really do think that that is the key to the entire passage. Jesus is not talking simply about gaining more information. He's talking about how we receive truth and what we do with it. Are we really listening? And this is especially demonstrated in the parable of the sower. So I want to take a look at that briefly. It says the seed is the word of God, but it falls onto 4 different kinds of soil. Some seed falls beside the road, and it's immediately snatched up by the birds. It never has a chance to grow. Some seed falls on rocky ground. It springs up quickly, but it has no depth, so it can't survive difficulty. And then there's some seed that falls among the thorns, and it begins to grow, but the scriptures say that the cares of the world and the deceitfulness of riches and the desire for other things choke it out. And then finally, there's some seed that falls on good soil, where it takes root and produces some 30-fold, some 60-fold, and even 100-fold. So it's not the seed that is the variable. So this is important here. It's actually the condition of the soil. So it's all about the person who's listening. Are you listening? In fact, in this passage, Jesus is always saying, he who has ears to hear, let him hear. So how we receive that truth and respond will give us an even greater understanding. But the person who treats it casually, who hears it, but he doesn't do anything with it, basically, you can even lose the understanding that you thought you originally had. It's all about the value that we place on what we're hearing, the attention that we give to God's word in this case. That affects how we come to understand it in the case of the gospel, whether we actually embrace it and find salvation.
So basically by quoting this verse, Nelson's taking that same principle and applying it to what he's been teaching throughout the book, the infinite banking concept.
Well, that's how I read it. The question is, have you embraced it in such a way that it will actually change your life? He's not putting IBC on the same level as the gospel. I don't want anybody to misunderstand me, but he is drawing a principle, a truth that understanding will grow when you give something faithful attention and application. So if we listen, if we continue to learn and we actually put these principles into practice, I think that's why it's use it or lose it. But if we neglect it and we don't practice, then it's going to begin to fade and it's not going to bear the fruit that we hope it will. We will actually end up losing it.
So Nelson connects this section with use it or lose it back to the arrival syndrome. And I'm trying to connect the two in my mind. So the arrival syndrome, I know, says, I already know this. I figured it all out. I've arrived. So how does it connect to the use it or lose it?
Yeah, I think it's just basically telling us what happens next if we think that we've arrived, right? If we think we know it all and we have it all figured out and we stop paying attention, then we don't practice it.
Yeah, and I know Nelson literally says here, and we might read it a little later, but it is like recognizing the fact that we must attend to bodily hygiene or face the consequences. Don't brush your teeth regularly and they will rot.
Nelson is always so descriptive. I love it. Yes, that's exactly what he's saying. In fact, he goes on and he says the arrival syndrome produces a comfort zone that causes people to lapse into their old way of doing things, a lifetime of accumulated information that determines how one conducts oneself. So in other words, we end up returning to the habits and assumptions that we held before we encountered these ideas. And I was thinking about that. What do you think are some of those things that come to your mind, those old habits that we could fall into?
Yeah, I went straight back to Parkinson's law and was like, well, we return to, spending everything that we earn and we can. So just matching those, expenses back to earnings.
Absolutely. That can happen for sure.
Yeah. And I know we can go back to, chasing the highest rate of return again, as though, that was the main thing that matters, kind of getting back into that old mindset.
Yeah. And I think another thing that I have actually seen people do more often is actually go back to our government programs because we get this fear of missing out, that we're missing out on that free money or, that tax deduction. So we have a tendency to do that. Or we just plain forget that we have a new way of financing our needs. So we just resort back to banks. We keep using that credit card. And sometimes it's just a matter of never really even getting started. Some people are so afraid of taking a loan that we buy the policy and we just let it sit. We think of it as a savings account. And in some ways it is, but I think we get confused and we think that just by buying the policy that we've checked the IBC box and that's all there is to it.
Exactly. It's like I paid the premium. I got the policy, dust my hands, done deal, and then just still pretty much doing everything else exactly the same.
Right. And that is not what the infinite banking concept is about. The policy is just the policy. The infinite banking concept is something completely different. It is the process. And I'll tell you, I really had a hard time with that in the beginning. I tended to associate the policy with the infinite banking concept. We forget that it's just the tool. But what Nelson is trying to teach us in all of this is that the infinite banking concept is a completely different paradigm for how we function in the world with our banking. So, I've compared it before to walking through the wardrobe into Narnia. We're in a completely different world with a different set of rules than we were back in London, as it were.
Yeah, and I think it actually goes on in the very next paragraph to say, what I'm teaching is equivalent to teaching that the world is round when most folks think that it is flat. Technically, that is a very simple thing to explain, but if you are one of those who think it is flat, then it becomes a very difficult problem. The infinite banking concept is dealing with a totally different paradigm. This amounts to a personal monetary system. So, it's really important to wrap your head around, and I can see how that easily gets confusing.
And I think part of it's because once you get started and you're talking to your coach, you're looking at a life insurance policy, you're learning how whole life works. There is an element of that. We're looking at the illustration on the page. We're looking at the growth on the numbers. And we begin to think that that is actually IBC.
I know we talked about this at one point, but that I kind of conflated the idea of like, it's the action of taking the loans and repaying myself interest that was contributing to the growth of the policy. Like that it actually, contributed to growing the value, but it's not, right? Like it's just more so the practice of banking, so that way you're being an honest banker, so to speak. Or is it just kind of the fact of like you're going to pay it back sooner? Like what's the point of paying yourself interest, if that makes sense? If it's not growing the policy, it's just because you're taking over what you would otherwise be doing, right? Like
that was my struggle for the longest time, and it's so many people's struggle. So I'm really glad that you brought that up, because borrowing against your policy does not grow the policy. Paying yourself back with interest does not grow the policy. But truly, it is the fact that you are creating a tailwind in your financial world. So yes, you have growth in the policy. You have purchased an asset, but it's what you're doing with it. It's what you're doing with it on the outside that is also creating growth in your own financial world, because now those dollars are not going to a third-party bank. They're coming back to you. All of that interest is flowing back to you. So it's the whole concept of taking over the banking function in your life, because banking is the most profitable business in the world. But I will tell you, even when I say those words, taking over the banking function in your life, I think I heard James Nethery use that phrase, 100 times. And I would scratch my head and think, what does he mean? He was speaking Greek to me. It just didn't even make sense. I was so unaccustomed to being the banker and understanding how banks make money. You are essentially making money off of your own financing by being your own banker, outside and in addition to the policy. Does that help?
I think so.
We'll continue to wrap our head around that.
Yeah, just clearing that up, like what is actually the growth factor, I guess you could say.
Banking and financing your own purchases and paying interest to yourself is what's giving you the tailwind. Go back to that airplane example that Nelson gives. That's where the tailwind comes in. It takes a while. You've got to build the capital inside the system. It takes a lot of energy to get that airplane off the ground. But eventually, it's going to begin to give you a tailwind that will then supercharge everything else you're doing in life. But it's not just inside the policy. Okay.
Yeah, and it's building that tailwind by taking away from the headwind, which is that 34.5 cents of every dollar, right, that we're paying in interest to third parties.
Yes, and that's just the interest piece.
Yeah.
Then there is also the opportunity cost. Then there is also mitigating the taxes. Okay.
Cool. Glad we got that cleared up.
Okay. We'll try not to beat a dead horse, but in the next paragraph, Nelson brings us back to one of the most important principles in the entire book that absolutely must be understood in order for the infinite banking concept to make sense. So your own money has a cost, just the same as borrowed money from the bank has a cost.
Yeah. So I know this sounded a little strange to most people the first time you hear it, and it did for me too. And it's fortunately something I learned about in school. But, if I use my own cash to pay for something, I typically don't feel like it has a cost because it's just like cash, it's not on a credit card. It's free money, don't worry about it.
Right. Because we're so conditioned to be told, pay cash, it's less expensive. You're not having to pay interest. And we think that simply because no bank is sending you a statement with their terms and their payback schedule. You're not seeing the interest on the page, but you still gave up the use of that money. And you gave up the use of everything that money could have earned from that point forward for the rest of your life. So most of the time people give lip service to opportunity cost. I'm even wondering about that when you say that you learned it in school, but we don't actually take it seriously and account for it truly in our financial world.
Yeah. And I think we're taught it at like a very surface level of like, well, if you have your cash, you can get the lollipop or you get the soda, and the opportunity cost is that you didn't get a lollipop because you chose a soda. It's very minimal, I think, typically of like the actual kind of understanding of opportunity cost.
So when I say we give it lip service and we don't take it seriously, Nelson is going to show us where corporations have learned to take it seriously. So if you'll look here on this last paragraph on the left-hand side, I'm going to let you go ahead and just read a little bit of that, if you would.
Okay. Yep. In the September 1993 issue of Fortune magazine, the story of economic value added, EVA, was reported. Many large corporations had achieved phenomenal success when they adopted EVA. All the concept amounts to is the recognition of the fact that your own capital has a cost of money, as well as that which has been borrowed from banks. That is the very first point made in the infinite banking concept, Basic Understandings page in the workbook.
He's actually referring us back to page 26. It says at the very top, you finance everything you buy. You either pay interest to someone else or you give up the interest that you could have earned. And it's no surprise that this idea is at the very top of the basic understandings because it's so fundamental to the entire concept. Because without understanding this key idea, IBC will never make sense to you because you'll wonder, why in the world would I borrow against that policy and pay myself back with interest? Why do I need to do that when I can just pay cash? If you do not understand that principle, that will not make sense.
It's a key concept to understand because it just gives you, I think, even at like the most basic level, it gives you not a reverence, but you care more about your money, right? Like every dollar suddenly has much more meaning. A dollar suddenly has far more potential than just its ability to purchase, $1 worth if you then put it through your system instead. Like all of a sudden that dollar has $2 worth, kind of in a way.
It's true. You realize that if I spend this dollar and I have to pay it back with interest to myself, I'm going to be a little bit more cautious about spending my dollars. And if you look further, what Nelson, I think, is essentially doing here is he's saying, you don't have to take my word for this. Large corporations have come to understand this principle. And it doesn't matter who's doing the accounting, whether that's Coca-Cola, as it says here, who became quite famous for this, the most admired company in America in March of 1996 in Fortune magazine. And that's why, because they started to do this, or whether it's you and me, it's the same. If we want to become profitable like they are, then we have to behave like a good and profitable business.
Well, I was thinking even in the context of, once you understand the ability to put your money back into your own banking system and collateralize against it rather than like it's that idea of, like you just said, once I spend the cash, it's gone forever. What I meant is like you suddenly understand the potential of every dollar that if you had put it through that system, that money can be, actively working and growing for you and then also collateralized against and utilized to, pay like cash or whatever.
Yes, I think what you're trying to say is that I stated it in the negative. I stated
so there's a negative and a positive.
About the cost of that dollar being more, but you're also saying, hey, when we start practicing the infinite banking concept, we actually get to see the positive side of that.
Yeah,
because we
exactly.
get the growth of that dollar. That's great. That's absolutely true. That's the wonderful benefit of it. If we look here in the next paragraph, Nelson's going to take a little bit of a turn because he talks about EVA, how it works, but only works if you don't make these common mistakes. So I wanted to look at them because he's comparing EVA, economic value add, that these corporations are using, recognizing the cost of their capital, is the identical principle that we're using in the infinite banking concept. There was a follow-up story in Fortune in May of 1995 that said EVA works, but not if you make these common mistakes. So take this as a warning to those of us who want to apply this in the infinite banking concept. And the first, he says, is that the companies did not make EVA a way of life. That is a central warning. Remember, it's a complete paradigm shift. This isn't just a tack on top of something else. This is actually fundamental to everything that we're going to do.
Yeah, I know. I've tried to start thinking of it kind of as like a central hub for my finances. And, this is the starting place. And then from here, I can do everything else.
Exactly. It's that foundational piece. If it's your banking system, there is nothing that's going to happen in my financial world without my money going there first, as much as possible. Obviously, there are limitations as we start. We can only start with so much. But I'm going to make sure that all my premium gets paid first, as much and as soon as possible. So as soon as I have money coming into my world, it's going to land there first.
And then go do whatever else you were going to do afterwards.
Exactly. But that leads us to Nelson's next warning, which is trying to implement the system too quickly. So apparently most managers try to implement EVA too fast as well. I think in the IBC world, that can look like maybe impatience with capitalizing. Someone wants nearly all of the first year premium to be immediately liquid. That's one way. Or it could just be taking off more than you could chew financially, right? Designing a policy just too large for you to handle. It is actually better for you to start where you can and be able to hit the maximum of that policy every year than not be able to make the premium payments.
Yeah. And I know I personally got very excited when you started teaching me about all this and, wanted it to get going as fast as possible. And you open your first policy and you want it to be like, all right, here we go. We're good to go. First year, I've got a full-fledged banking system. And, it's very natural for us to look for a quick fix, but IBC is not the get rich quick scheme. It's just the get rich scheme. It's the same idea that we talk about all the time of when's the best time to plant a tree. If it wasn't 10 years ago, it's today. So it's just a matter of getting started and doing what you can, like you said.
Absolutely. Like we're basically starting an exponential curve in our life. We all want to be way over on the hockey stick side of the curve. We want to get on the right side before we start on the left side. And unfortunately, it doesn't work that way. I got to be patient. I've got to take time. Let it capitalize. You're going to get there. All right, let's see what's next here.
Yep. The next warning is that the boss lacks conviction. And I'm guessing that in this case, he's referring to us as the boss, and we're the ones who are lacking conviction.
Well, like this one made me think about the parable of the sower where the seed fell on the stony ground. There just was immediate excitement, but there wasn't enough soil for the concept to really take root. And so after a bit, it didn't really flourish because perhaps we didn't really get enough solid understanding to stay the course. So when it got a little bit hard, or when you needed that patience and you feel like you're just watching grass grow and you don't really understand it, you can give up on it. So you don't have the conviction. You didn't really take the time to pour yourself into study and understanding.
Yeah, there's certainly an element of, trusting the process. And I shouldn't have even said get rich scheme. It should be get rich plan, because it's much more of a long-term plan, And you can feel like it's not working because you don't see it so fast and don't see like immediate results.
If we haven't really embraced it, and it's our human behavior that gets in the way. The policy is going to do what the policy is going to do over time. But again, it's more than just about the growth in the policy as well. It's what are we doing to actually put that banking process to work? All right.
Well, to quote the book, it's like once you understand what's happening, you'll know what to do. So I feel like once you truly understand, it's like all you want to do. It's like, I want to do this as much as possible. Like, I know you're like that because you're trying to get as much of your income and premium as possible. And so I think it's just one of those things that when it clicks, it really clicks,
Just thinking back, I can remember how many times I would think I understood it and I'd be, okay, I got it this time. And then a little bit of time would go by and I'd be like, wait a minute, I don't know that I understand it. And I'd have to go back. And I just felt like a toddler trying to learn something new, trying to learn to walk. It just took so much repetition. But if I don't embrace it enough and I don't have that burning desire to make sure I understand this, I can see where I could give up on it. Yeah. What was next here? I think the next thing was managers fuss too much.
I think it said... Oh, that is actually what it says. Oh my gosh.
Yeah, it says managers
fuss too much. I was going to read because I thought that it said differently in the book. I thought you were paraphrasing. Okay. Sorry. My bad.
Yeah.
That made me laugh.
Yeah. So managers fuss too much. I really think this is where we major in the minors. People can become completely preoccupied with details and they lose the central objective. So, for example, I have friends who obsessed for the longest time about which company, what exact split between base and PUA. They got into the weeds and they become consumed with dividend scale or illustrated values or whatever, but they miss the big picture. And the more important thing is to remember, hey, I've got a dividend paying whole life insurance contract and I need to just start building and controlling my own capital. So sometimes it's not majoring in the minors so much that you don't even get started. We want to replace the banking function in our life. That's the important thing.
Yeah, I'll throw out one of my favorite corporate jargon quotes is, you'll miss the forest for the trees.
That can happen very easily, no doubt.
Okay, I think this next warning might be the most important. Training gets short shrift. And I don't even know what shrift means.
I don't know that I could actually define it myself, but we read a part of the book. Maybe somebody reads the whole book. They purchase the policy and then they think they're done. And truly, that's when the education just begins. Buying your policy is not graduation day. It's actually the very beginning. Think of it as enrollment day. When people finally get approved, I'm sending them emails saying, congratulations, you are starting your journey. And I can't wait to walk alongside you on this journey. And I feel like a broken record, but I say it constantly. You must keep reading this book. And when you have read Becoming Your Own Banker several times, then go ahead and pick up Nelson's second book, Building Your Warehouse of Wealth. When you finish Nelson's second book, go back to Becoming Your Own Banker. I recommend people read it every year. And the reason is it changes once you've paid a premium. But there's also some other places that you can learn, certainly. Listen to this podcast. It's the whole reason that I'm taking the time to put this together. It's for the education of my clients. But also you can go to the original source, the infinitebanking.org website from the Nelson Nash Institute. There are learning videos available there. There's also a section called their bank notes that they have articles that are written every month. All very good sources of learning.
No, there's one you haven't mentioned, and I know you're very passionate about, and it's very important to make sure you have a good coach. You need someone who's going to help you and, really implement this into your life in a practical way. And I also just really quickly looked up what shrift means, and it's the act of confessing our sins in front of a priest for absolution. So I guess, that we don't spend enough time confessing or spending our time in that.
We're short on confession. That's funny. All right. Yes, I'm actually glad you brought that up about a good coach because that is so important. This is not something that you should do in isolation. You really need to have someone you can reach out to, ask good questions. And for example, I don't know when your air conditioning unit is going to need replacing unless you call me and say, hey, I suddenly have this expense. I have this air conditioning unit to replace. Should I use my policy? How do I do that? Or oftentimes it's people, they're actually nervous to pick up the phone and admit that they're struggling to make their premium payment. But call me. A good coach is going to help you strategize on how you could get all of that PUA premium paid before the end of the year. It's learning a whole new pattern of spending. So it's not even necessarily that there's not enough money. It's just learning how to flow that cash flow through the policy first. I just always want to encourage my own clients to understand that's what I'm here for. I want you to get to a place where you are independently your own banker. It is called becoming your own banker. You are becoming. Eventually, we want you to be a banker with confidence and be off and running. But we don't do this alone. You have to have a good coach. Just like in athletics and you're learning a new skill, you need a good coach.
Spending this time here with you off of the podcast and on the podcast, it's very plain and obvious to me that, you're doing so well with this because you really truly have studied this and integrated it into your own life and made it a way of life for yourself. And it's made a huge change in your life, my life, and my nieces and nephews' lives, your grandkids. Maybe you could share a little bit more of your own personal story so people can kind of understand what it takes. For example, I know you didn't stop buying after your first policy. You went for another and then another. And want maybe some more.
Well, I appreciate that. I think one of the biggest reasons that I've actually experienced the real change in my financial life is that when James Nethery pounded it in my head, the premium is the solution, I believed him. I literally have the t-shirt. He had a t-shirt that says, the problem is the problem, and on the back, but the premium is the solution. So I kept asking myself, how can I pay more premium? I just wanted to know, how can I replace more of the banking function in my own life? I have money flowing through my hands. So I thought when I got my first policy, I had a pretty good sized first policy. But lo and behold, before the year was up, I added a second policy. In fact, it is 8 days apart from the first policy on my anniversary date. And then I added another policy probably in about year 3 or 4. And I added a fourth policy this year. But let me just clarify something here. It doesn't matter how many policies you have. Yes, it is to be a system of policies. Nelson never intended it to be one policy, but it's really more about how much of the income that is flowing through my hands is now being used to capitalize my system. I am now at approximately 66% of my income flowing into my policies. The goal, of course, is 100%. And Nelson says it'll take the average bearer, I don't remember, 15, 20 years. So
You're well on your way.
I'm well on my way. But even more importantly, I'm no longer dependent on a third-party bank, except for perhaps a mortgage. Give me a couple more years, and I'm going to be sure that that's no longer true either. But sometimes I just want to shout this from the rooftops because I see people struggling. And yet 7 years in, as a single mom, I have substantially changed my financial life. And remember, Nelson too, it was in his time of crisis that he realized he had to pay more premium, not less. And I just keep that in front of me. So
yeah, and your growth wasn't just happening because you owned policies either.
No, it's what they provided. They provide access to capital, the ability to recapture the interest that was going to third-party banks that is now coming back to my system. And now I have access to capital on demand on my terms. So these policies are just the platform. I still, of course, had to capitalize them, use them, repay the loans, study. I've done a lot of study, develop new habits, all of that for sure. But if you would have asked me 7 years ago if I would be where I am today, I would have never dreamed it, honestly.
Yeah. And I know Nelson kind of says in the next paragraph, accepting a totally new point of reference means that one must develop new habits.
That's right. Totally. And he goes on to say, this is interesting too, with what we've been saying. In talking with members of the Infinite Banking Concept think tank, we continue to notice that many are still caught up in the posture of thinking that the matter is a function of interest rates. This is a fatal error.
Yep. And that's literally what I just talked about a little bit ago about my own understanding. So, we've been conditioned to believe we must always try and earn our highest rate of return as possible, mainly because we're trying to keep up with inflation. And, borrow at as low of an interest rate as we can as well. And, if that's not necessarily true, are you saying the opposite can be true? So a person could basically earn at a lower rate of interest, borrow at a higher rate, but still be doing better financially?
It's counterintuitive. I'm not saying it's a bad thing to earn a higher rate of interest, but in practicing the infinite banking concept, I am often borrowing at a higher interest rate by borrowing from my policy, but because I own the debt and I'm the banker, then that payment flows back into a system that I own and control. Control matters so much. He who owns the gold makes the rules. So control matters immensely, but so does the direction of that cash flow. Those payments are now coming toward me and my family rather than permanently away from me. I would say that is probably the biggest difference. And that's why IBC is not about a rate of return. It's about the volume of interest and where that interest is flowing.
Yep. We're not saying don't go seek a high rate of return and invest and do fun, awesome things. Just put your money here first, then go invest, start businesses, do all these things, but create your own system of finance, recapture that interest. Like you said, the flow of the money. Put your flow back through your pond, if we go back to Beaver's bankers. But, building that pond, building that system, flow it through there, then go and do your ventures. And
yes. And when you said that, this just reminded me on page 69, at the top of the page, the title of the section is, but I can get a higher rate of return. And here's what Nelson says. To your point, we're not saying don't get a higher rate of return or do an investment. Put your money in your policy first, then go do your investment and get another rate of return so you can have it on both sides. But here's what he says. This is such a mic drop. So there is no way that a person can get a higher rate of return by ignoring the banking process. I mean, you can't say it any better than that. So
essentially, because if you're not playing banker, you're always losing.
That's right. That's right. Do that first.
So is IBC basically a little bit like having your cake and eating it too?
Yes, it is. I mean, I can save and spend at the same time. I can earn over here and invest over here. Yes, it absolutely is. Like having my cake.
Having a cake and eating it too.
And eating it too.
Yeah.
All right.
So after all that we've learned, to not do that is basically like going back to Egypt for another biblical reference and subjecting yourself back to that slavery. And Narnia, right, where we want to be, is the land of the free.
So if you're not using it, you're not operating under this whole new paradigm. So let's continue with this section here because he says that is the fatal error. Instead, the infinite banking concept has to do with recognizing where money is flowing to and the failure of charging interest to yourself for the things that you buy using your own banking system. First, the important point here is to actually use your own banking system when you're making purchases, especially larger purchases. And I don't mean that you need to run all of your grocery money through your policy. That might be an administrative nightmare, okay? But something that you would be spending money on anyways. In particular, things like maybe you need a new appliance. Maybe you have a major home repair. Maybe you do need a new car, or maybe it's paying tuition. Whatever it might be, borrow from your policy and use the life insurance company's money to pay for that purchase. But the second piece of that is to be sure to repay your banking system at a market rate that reflects what you would have paid somewhere else at a bare minimum. And if you really want to grow your system, you're going to pay yourself even more than that market rate. And that's because eventually that more can become premium.
Yeah, and this takes us back to the grocery store example where we would rather, as the owner, pay 63 cents for the can of peas instead of 60 if you want to be more profitable.
Exactly. You want to be the bank to yourself. You are becoming your own banker. That's the title of the book. And sometimes I just think, take those 4 words and just work with them in your brain. Becoming it's yours. You own it. You're becoming the banker. All right. One of the things that Nelson taught right back in the very beginning, that money has to flow. The money's already flowing. It's moving from point A to point B, but usually point B is back to the bank or a finance company or a credit card company away from you. Instead, you want to become that point B. You want to be the financial system that is receiving that cash flow. It's really that simple.
Flesh out that example. When we went and got my car with the policy loan, we looked at what I would have been charged by the car company to finance through them. I'm just throwing a number out there, say it was 5%. And then I chose to add 2 or 3% more onto whatever I would have had to pay them and pay that to myself. So say 7 or 8%, just for argument's sake. But so for us policy owners, what is the main takeaway from this section today?
Okay. I think it really comes down to this. Do I have ears to hear? Am I really paying attention? Am I putting what I'm learning into practice? Let's remember that Nelson opened this section with Mark 4:25. I'm going to say it in plain English. For he that has, to him shall be given, and he that has not, from him shall be taken even that which he has. So am I going to keep growing in my understanding and actually using what I've learned, or am I going to let this become something that I once understood but never really put it into practice? And maybe the clearest way to ask that in terms of IBC is this. Am I merely a policyholder, or am I actively becoming my own banker? Because that's where Nelson has been taking us through this entire section on the human problems. A policy by itself is not the point. It's about becoming your own banker. So use it or lose it. Jonathan, I enjoyed this one. I hope you did too.
Yeah, absolutely. I always enjoy being here and learning more about the infinite banking concept with you. Thanks for having me, and thanks for teaching me along with the audience.
All right. Well, thank you all so much for listening. And until next time, you have a great rest of your week.
Thanks for tuning in to the Bankless by Design podcast, where we're done with the system and we're doing money differently. Be sure to subscribe, share this episode with someone who needs it, and visit us at banklessbydesign.com to learn how you can start living bankless by design.